It's an election year, and if this is news to you, where have you been? As we know, the real estate market has still been a bit volatile. So is this election going to maybe help it or hurt it even more? They say history repeats itself. So let's take a look at past election years and see what's happened then to help us understand what we can maybe expect this year. I'm Hannah Escher. I'm a rookie investor with 2 properties, and I'm so excited to talk with you about this topic today. Everyone has this doom and gloom perspective that election years can really shake up the market. But is that even true? If you look at data from all the way back to the 80s, we can see that a lot of these market shifts are due to many factors in the economy outside of elections. Data shows that on average, home prices have climbed 4.84% in election years since 1987. In non-election years, values rose 4.44%. So we can see the average rate of appreciation in election years versus non-election years is very, very similar. Now, the age-old question we ask every election year, is this year going to be any different? And if so, why? Well, as we just stated before, appreciation for home prices hasn't changed much over the past years, whether it's an election year or not. Now, I do want to point out that inflation has been all over the map, regardless of who is in office or what party is in control. If you think the federal funds rate is high right now, well, take a look at it in the 80s because it was 20% because of how the Federal Reserve was trying to help curb inflation. We've also experienced in the economy negative inflation, and that took place during periods of time during the Great Financial Crisis in 2008 and 2009. So inflation has been all over the place regardless of who is in office. Now, something to think about when we're thinking about presidential elections and how it's affecting the housing market or the economy is data shows that the presidential election itself is not what is impacting home appreciation or what is impacting these wide variety of inflation that's been experienced over the years. However, policies that are put into place after those presidents are elected can absolutely affect what is going on in the economy. Many times, as we will see throughout history also, presidents inherit a crisis or some situation that has to be responded to. And how each president or party decides to respond to that situation may look different. However, it's good to keep in mind that policies are many times enacted in response to some type of crisis. And this is very explainable and understandable when we look at crises such as the 2008 financial crisis or the more recent COVID-19 pandemic. We can see with these 2 crises specifically how the president and party that was the majority at that time responded to what they thought would best help the economy flourish. So, for example, in the COVID-19 pandemic, there were many policies that were passed in order to support people during that time because there were so much job losses, there were so many businesses that closed. That's why the Federal Reserve took that rate so low, because they wanted to stimulate the economy and guard against any type of recession that might come because of all these job losses and businesses closing. Similarly, in the 2008 crisis, there was a lot of government support that was passed in order to help people get through that economy. And then referencing back to the 1980s when the Federal Reserve took their federal funds rate to 20%, that was to guard against very high inflation and the Federal Reserve trying to help tame the economy so that inflation could get under control. Similarly, in our current situation, the Federal Reserve, even though the federal funds rate is not that high, they have been on a rate increase journey in order to try to help the economy tamper inflation. Now, when we're talking about inflation, a really simple way of understanding this and how the Federal Reserve is looking at inflation and driving the economy is if we're looking at a recession and we're looking at the economy doing poorly, usually the Federal Reserve is going to be lowering inflation election because they want to encourage spending. They want to encourage people to go out and help the economy blossom. Conversely, if we're looking at a very hot economy, which is what we're looking at right now, where there's a lot of job growth, there's a lot of spending going on, prices continue to rise, that's when the Federal Reserve is going to look at ways to tame inflation, essentially trying to help people not spend as much money, so then there's more of a balance between supply and demand. So you'll see that whether it's an election year or not, the economy is always going to be ebbing and flowing, and policies are going to be put in place to help either tame or boost the economy. And just as a reference, the federal funds rate today is between 5.25 and 5.5%. So it's nowhere near that 20% of where it was before. However, we're really feeling the crunch here because the federal funds rate was reduced to 0 during the pandemic. So what does this mean for you as a home buyer or home seller right now? Well, if we look at the data, markets have remained similar, whether it's an election or non-election year. Again, keep in mind that the policies that are enacted after the election may be more impactful than the election itself. So this is where you want to stay as informed as possible. Once that election happens, don't tune out. Stay informed and make sure you as a property owner know how policies are going to affect you now and in the future. So just as an overview, because we've covered a lot today that's a little bit outside of the normal investing talk, historically home prices have continued to rise year over year, and I wouldn't anticipate that changing unless something drastic happened in the economy as a whole. Usually policies are enacted in response to current economic conditions or in response to crises as they come up. Now, just as a reminder, we've already been through a global pandemic and a banking crisis, and home prices have still continued to rise. So even recent history has shown us that home prices are continuing to rise even in unfavorable circumstances. With that being said, if you're looking to buy or sell right now, it really is business as usual. Continue to do your market research. Continue to cross your T's and dot your I's, and don't let an election year get in the way of making decisions for you and your real estate investing portfolio. That's it for today. Hopefully this video has helped dispel any myths that are out there about election years and the market. I'm Hannah Escher. You can search my name on BiggerPockets. And if you found this video helpful, like and subscribe to the BiggerPockets Rookie channel for more videos just like this.